Welcome to this segment of Plan Well and Execute podcast. This morning, I have with me Larcina Carrington Wynn, the president of Carrington Financial Services, and for full disclosure, Larcina is also a friend of mine, and she also does my corporate and personal taxes. So good morning, Larcina.
Good morning.
Well, thank you. One of the first questions to get started off, Larcina, is where do we find Carrington Financial Services both in physical space and in cyberspace?
Well, Carrington Financial Services is located on Whaley Avenue, 419 actually, Whaley Avenue in New Haven. We also are located on the third floor, and we've been in that location probably since about 2005. I also have a website, www.carringtonfinancial.net, that you can also go to the website and get information about our company. We actually, at Carrington Financial Services, we prepare tax returns, which is the biggest revenue stream of my company. But I also specialize in accounting for nonprofit organizations and for small businesses.
So tell us a little bit more. You work with companies and individuals in order to help them to prepare their taxes?
Yes, with individuals who specifically around home ownership, individuals who just regular working people every day, with children who go to college, just your everyday working person. But I also work with small businesses as well. I do a lot with small business development, but I actually focus in on specializing in deductions specifically to the small businesses.
Okay. And we'll talk a little bit more about those deductions because we have some questions that have come in from some of our listeners, and so we'll ask you those specifically to help with those information for deductions. But let's just get started. What date can you start to file your taxes?
Well, you actually can start filing January 1st. However, the challenge is that a lot of the forms the IRS require you to use is not available. The best time to actually start filing your taxes would be after January 31st, when all of the institutions that owe you forms, like your W-2 forms, your mortgage interest statements, by law they're required to have them to you at least by January 31st. So you can start January 1st, but you actually shouldn't get started until after January 31st.
And that's for individuals, or corporations or companies have the same filing deadlines or timeframes?
Corporations can have a different filing deadline, but for individuals specifically, you can start January. You should start around January 31st.
Okay, so right now is a great time to start putting those files together and start looking for that information coming through the mail.
Absolutely. And you probably won't get started till after Christmas though, you know how folks do. But anyway.
That's true.
Yeah.
Well, that's the beginning of the tax filing season. So what's about the end dates for both personal and for corporate?
Well, actually, there's like what we call a little gift for everyone this year. Taxes are usually due by April 15th. But because the April 15th is a federal holiday called the Emancipation Day that Washington, D.C. Celebrates,
Okay.
so because that date falls on a weekend or so, you actually don't have to file your taxes until April 18th. So the government is actually giving you 3 extra days.
Great. I probably need to take advantage of that myself. So speaking of that, you talked about some of the deductions and those kind of things. For individual taxes, who can you claim as dependents on your taxes?
Well, that's a great question. You can definitely claim your children.
Okay.
You know, those are folks that you actually take care of. We tend to claim your parents. If you're taking care of your parents, you know, elderly parents tend to live in the same household that you are living in. But there might be some gray areas where, you know, you're not married. You know, there's always a question about whether, geez, can I claim the person that I'm in a relationship with? And majority of the time, the answer is no. But the best thing to do is to really sit down with your tax preparer and let them understand who you're thinking about claiming, because even with your children, if they make over a certain dollar amount, you can't claim them either. So it gets to be age specific and income specific. That's why you need to be careful about that.
Should you have that conversation with your tax preparer prior to the actual sit down and conducting of the actual review and completing it?
Absolutely.
That way you can have your documentation in order?
Right, because you don't want to sit down with your tax preparer and tell them that these are the people that you're claiming. The tax preparer should be asking you about the individuals you're doing so that you can appropriately understand that that's who you should be able to claim.
Okay, great. And speaking of your children, you touched base on that. How long can you claim your children on your taxes?
Well, if you're usually up until 19 years old. However, if your child is actually going to college, you should be able to claim them up until 24 years old. However, there is an income limit that if you're If the young person is making over $3,700, then you probably should not claim them.
Over $3,700 a year?
Yes.
Okay, which would include summer jobs or those kind of things? if they're
Any
involved?
combination of that, you would not be able to claim them.
Okay, great. You talked a little bit earlier in your introductory remarks about deductions.
Mm-hmm.
So can you tell us what's the difference between deductions and credits?
That's a really good question as well. The deductions are items that lower the amount of income you're going to be charged taxes on. Credits, once you figure out how much it is that you actually owe for taxes after your deductions, credits will be allowed to lower the actual tax dollars you owe, dollar for dollar. So the difference is that the deductions lower the income and the credits lower the tax amount you owe.
Okay, could you give us an example of either a deduction or a credit?
Itemized deductions is something that a lot of folks are familiar with. And itemized deductions are items such as your mortgage interest. You pay your car taxes, you pay your house taxes, you pay charitable contributions to churches or to other nonprofit organizations. All those items combined will lower the amount of income you would pay your taxes on. Credits are, you have children that are in daycare, and so you get credit for daycare expenses. So if I owed $1,000 after I've done the deductions and I ended up with credits of $200, that means that now my taxes are only $800.
Oh, okay.
So with that, folks really need to find the items that they can actually lower their taxes with. It's to their benefit.
Okay, great. You mentioned charitable deductions, this being the holiday season, and people are looking for ways for deductions. Charitable deductions, that include like the various Vietnam veterans or church deductions, those kind of things. What might be some of the charitable deductions we could consider?
The ones that's popular is, of course, at this time of the year, you want to give to nonprofit organizations, and you have to make sure that those organizations are registered with the IRS as nonprofit, because you do have folks who act in a nonprofit capacity, but they're not registered. Those are not deductible contributions.
Oh,
You have to be careful of that. But for the most part, when you put money into a Veterans Cup, but if you don't have a receipt to support it, you can't deduct it.
Ah, okay, so you have to not only have the deduction or charitable giving, but also have receipts or documentation
Exactly.
for that? To support
Documentation is key. In the government's eyes, if it's not documented, it didn't happen. And I shouldn't say that because that's not really a good thing. But anyway, other deductions that you can do all throughout the year, not just around holiday time, I mean, that's a good time, is when you want to clean your closet out and you want to take those items to Goodwill or Salvation Army. All of those things are deductible. You just have to keep track of, if you took in 3 bags of clothing, what are those things worth? So that way you'll have that support to be able to deduct those off your taxes as well.
Okay, well, great. Thank you for that. Speaking of deductions, what are some common deductions that perhaps get missed by most people that are available to them?
Especially the charitable contributions for clothing. When I'm surprised. I mean, that's like money. People will take the clothes, they'll give them to someone, outside of a nonprofit organization. They'll put it in a bin, they'll throw it out. But you have that little receipt, and if you have a large sum of income, you'll see how much that's like gold. That people tend to miss out on that. Also, as part of itemizing deductions, you can also deduct your medical expenses over a certain dollar amount. People don't keep track of those as well. And then there's some employee expenses that, as far as not being reimbursed for your mileage, there's a certain income limit that you have to deal with, but those are things that you can actually deduct as well.
The amount of mileage I drove in support of nonprofit organizations and charitable work I was doing, that was also available as a deduction.
Absolutely, and people don't realize that even though the charitable mileage is at a lesser percentage, but it is deductible.
Okay. So you talked about charitable giving. Would that also include, as I've noticed, perhaps electronic equipment, a monitor that I don't use anymore because I want to get a different monitor, or maybe some furniture I have around the home? Would those still qualify as deductions to charitable organizations? When I
As
make a
long
donation?
as you have a nonprofit organization such as Easter Sales or Big Brothers, Little Sisters, any of those programs who are registered as a tax exempt organization, and they give you a receipt, it becomes deductible.
Okay. And those deductions can certainly add up in order to reducing your tax obligation.
I collect mine on a regular basis, for sure.
Okay. All right, fine. Well, why don't we switch gears a little bit and talk about healthcare? And so there has been, pardon me, a lot of information coming out regarding the Affordable Care Act, aka Obamacare. And so what happens if you don't have health care?
You're required by law now to have engaged in a healthcare program. If you don't do that, by the end of the tax year, you will actually be penalized on your taxes. And every year that penalty is getting larger and larger and larger. If you don't have the health care, last year you were penalized $95. I believe this year is going up to almost $400. The other key to this as well is that the health care portion of who you access it from will be required to follow your income, is how they were able to say how much you were going to pay them. If you underestimate your income to them, and when it's reported on your taxes at the end of the year, you're going to end up having to pay back all of those premiums that was subsidized and pay a penalty on that.
Okay.
So what you need to do is actually contact your tax preparer way before the end of the year, so you can actually see what that looks like, especially if you haven't had any health care all year. You don't want to be surprised.
Right. Well, healthcare is very important, though, to have that insurance for not only your family, but it's for your, because one of the greatest reasons for the people talk about having financial difficulties was health claims, health issues, and so it's worthwhile to keep that in mind going forward. All right. So actually, okay, so we've gone through and we completed our taxes and we've submitted them. And then all of a sudden I come back and say, well, gee, I found something else that perhaps was a deduction I forgot. What can I do about that? If there's a mistake on my taxes, if they've already been filed.
You can actually do what they call an amended tax return. And especially if you want to be able to amend that return if it's going to result in a refund. You're able to amend your tax returns for at least 3 years, and the government will give you back any refunds that are due you based on that amendment. If you found that you hadn't filed your taxes in 4 or 5 years, the government will not give you back your refund if it's more than 3 years old. But yet, if they were to audit you, they can go back 10 and 20 years and get every dime that you owe them.
Oh,
So
okay.
you really want to be able to make sure you file your taxes on time.
So that's one of the reasons why you have a professional tax preparer helping you with that, such as Carrington Financial Services. We want to make sure you're on time and make sure that's accurate along
And
the
I'm
way.
good.
And you're good, absolutely. I can attest to that.
Thanks.
So when I get a refund for my taxes, if I file late, can I get a refund those later years that you just mentioned?
As long as it's no more than 3 years.
No more than 3 years.
You may be able to get some money back, but it won't be at the full value 4 years past 3 years. But more than likely, you'll get 100% back if it's more than 3 years.
Okay.
It's less than 3 years.
Thank you. So everyone listening to this broadcast and everyone listening to this information being presented by you will certainly have their taxes done and filed by the April due date. But sometimes things don't always come together for us. And so what can happen if someone isn't ready for that April 15th or April 18th date for 2016?
You can actually get an extension, an automatic extension that would allow you to file your taxes in October. It's an automatic 6-month extension. If you apply for that extension prior to April 15th, well actually this year is April 18th. And you don't have to wait till April 18th to say I'm not ready. You know you're not ready at April 1st. So the sooner you do it, but the deadline is the same deadline for applying for your taxes. By April 18th, you can get an extension to October 15th.
Okay, great.
Without penalty.
Without
I need
penalty.
to express this. Without penalty for filing late. It does not buy you more time to pay the taxes that you owe. You will still get interest payments on those amounts due, but you have to, like I said, you would save yourself money from not being penalized for filing late if you file the extension on time. but it doesn't give you an extended time to pay.
Okay, great. So you can file for an extension for the actual preparation of your
Yes.
taxes, but you still have to make the payment of the dollars due at that time.
Yeah.
Okay, great. Or not so great, as the case might be.
Right.
All right. What is the Way to Save program, please? I've heard about that.
Well, the Way to Save program is a program that I've been involved with now for about 2 years. And what it says is it actually encourages families to figure out a way to begin to put money aside for emergencies. We find that there is about $150 billion, I think they said, in refunds to a certain level of income families, and those families struggle day to day to meet their daily needs. So the Way to Save program is a place where they are trying to teach families how to put something aside. So they partnered with the IRS that there's a form called 8888 form that would allow you to split your refund into different accounts that you have. So if you have a savings account, you have a checking account, and some other things, you can take minimally $50 and put it into one of your other accounts. And that's all they're asking you to do. They're just saying, please just put some money aside and begin the habit of saving at least $50 a month, if that's all that you can afford, because it's more about the habit of saving versus the amount of saving. So what's happening with this Way to Save program, the incentive is that if you participate in the program through your tax preparers who are registered, you can actually get into a drawing that you can win $100 if your name is pulled through the drawing. At the end of the tax season, they actually have a contest that you can win $25,000 if you tell them how you plan to use the $25,000. But the biggest thing is about encouraging people to get in the habit of saving.
Right, because saving is a habit, and it's not something that many of us have lost or perhaps never had in the past.
Right.
And so helping to encourage that habit becomes a custom not only for the individual, but the children start to see and recognize that saving is important. So it becomes generational as well.
Right.
That's fantastic. Okay. Can you tell us a little bit about 529 accounts?
That's a really tricky. 529 is a college savings account through the state of Connecticut, and I'm not sure if it's a federal program. But the 529, when you are not sure on how you're going to raise money for your children's college education, the state of Connecticut has created this program that can help you save all throughout the child's life and being able to apply it to their college tuition, when the time applies. Now, some folks are not able to use it because the child didn't go to college, so it's still your money. It doesn't necessarily have to go to the college, but you would be penalized if you don't use it for what it was specified for. But it's a great program that Connecticut has.
Okay, that's fantastic. One of the benefits of living in Connecticut.
Yes.
So if we may switch a little bit to talk about business and corporate taxes. For small business and business owners, let's talk about the deductions question again.
Okay.
Are there deductions that small business owners perhaps miss or don't keep track of or don't document along the way? Give us some insight about that.
Yes. The deductions that folks miss are like advertising. So through advertising, there's many people who will come to you and say, can you take an ad out? A $50 ad, $100 ad, full page business card ad. That's considered advertisement. Keep track of that. That's a deduction that people miss out on. Mileage. People tend to not record their mileage. If you're actually going around trying to find business for your business, or you're actually going to a customer because of your business, you keep track of that mileage. Mileage rate at this juncture, and don't quote me on this one, but it's usually a 55.5-cent reimbursement. It's missed on a regular basis. Repairs, you might have had your computer repaired. You don't think about that, or your printer repaired. Anything in your office repaired. That's a deduction that people miss. Magazine subscriptions, if it's specific to your business, that's a deduction because your business actually needed that periodical in order to, inform their clients. Training classes, conferences. If you go away, if I'm having lunch with you, and we talk business about my business, then that's a deduction that people miss as well. It's a lot of things that if you just sit down with your tax preparer, you'll be, it's much beneficial, so that way you can pick up those items that you normally wouldn't even think about.
Is there a way that you would suggest that businesses could start to document or keep track of these deductions over time? Because sometimes in the course of business, you're busy, you're running back and forth between meetings, and you may miss something. So you have any recommendations about how people might be able to start documenting this stuff so when they come to speak with you, they can be clear about their deductions?
Yeah, I'm smiling because I have a tendency to talk to my clients who consider me as their accountant when I'm sitting there doing their taxes. I am not your accountant. I have only seen you once this year. What you should do is really sit down with your accountant and sit with them monthly, minimally monthly, if not at least quarterly, so that way you can see how your business is doing in relation to what you need to prepare for your tax returns. So there's logs that you can actually do as far as mileage logs. There is, simple software that you can do just on the accounting part of it. But you really need to pay attention to your business on a more regular basis, so that way you can prepare for whatever the tax consequences is going to be.
Okay. Speaking of it as a small business owner, if I'm interested in starting to perhaps looking at something new or some new expansion, is it worthwhile to have a conversation with you prior to that to understand perhaps some of the tax implications or what that might mean for me?
Absolutely. One of the things that I'm studying more is small businesses become LLCs, and they really don't use them to the fullest extent of the benefit of the program. What I'm finding out is that there's an election that you can do to be a subchapter S or be a C Corp, but understanding how that would affect you in your business. So if you were to sit down with someone prior to you doing this, then you can understand the tax consequences of what is going to best benefit your program in that regards. But you really should get an understanding that, what the LLC stands for, and which is just the protecting you from liability. But that's not the only part of it. You need to choose how the federal government is going to tax you, and that's something folks miss out on. I'm finding that a lot lately in this past year.
Now, is that some information that someone would want to speak with you about directly, or can they find that on your website, or how would you suggest getting?
Right now, they can speak to me directly. And one thing I didn't do is give you my phone number. My phone number is 203-842-8295, and actually it's 203-842-TAX5. But we will make sure that that information actually gets out on our website.
Okay, great. Well, we've covered a number of the questions that people had submitted to us. Anything else you'd like to tell us about tax preparations for this upcoming season that perhaps we missed?
Well, at this juncture, really start, I know it's Christmas time, and I know folks are, spending money and things of that nature, but right after Christmas, really start kind of taking a look at your year to kind of see what you actually need to go to be prepared for your taxes. And start calling your tax preparer around January, so that way you can get in line with the checklist of some sort, so that way you'll be really prepared when you sit down with them this year.
And you mentioned a checklist. Is that a checklist that you have on your website?
There's going to be an actual video checklist on my website where I'm actually going to tell you exactly what you're going to need.
And what's that website again, please?
It's www.CarringtonFinancial.net.
That's www.CarringtonFinancial.net.
Yes.
Well, with us this morning, we've had Larcina Carrington Wynn, the president of Carrington Financial Services. And Larcina, I want to thank you very much for our continued friendship and your professional support of my business and family, but particularly today for coming and sharing your insight regarding tax preparation, some of the things we need to be concerned both individually and from our business perspectives. So good luck to you and have a great day.
Thank you so much for having me.